Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical support and demand area. From here, all this rejection to the upside was created. The market at the moment is testing the exact same zone, has already started rejecting it to the upside. So in a situation like this, more bullish price action could be created away from this level. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, everything seems quite bullish. The market has now shifted to creating higher highs and higher lows, after for quite some time it was creating lower lows and lower highs. Therefore, it is a clear inversion of the trend, and we could expect more continuation to the upside to be created in a situation like this. So for the market to create a correction and then more continuation to the upside, essentially printing a new higher low, higher than the previous low, and then a new higher high, higher than the previous highs. Now, if we drop down on the daily time frame, what do we see? Well, from a daily perspective, the situation is quite clear. We just had a very strong impulse to the upside. After an impulse, we could expect a correction. Now, if we want to measure this potential correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, and this gives us the Fibonacci retracements here at the 0.32, 50% and 0.618. And this area, if we extend it to the left, we can see how it is a quite strong area of previous supply and resistance from which all these rejections to the downside were created, which has now been broken to the upside. So this previous resistance would be turned support here, therefore creating a confluence of support with the Fibonacci levels. And inside of a confluence of support area, there is a good probability to see a reaction to a zone like this. So if the market here will go and retrace to this area, there is good probability to see more institutional longing inside of this zone, which at that point would further increase the probabilities of a potential rejection to the upside away from this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data for the pound, we can see how with the last reports, we went from having a negative net positioning of minus 27.7k net positions all the way up to having a positive net positioning of plus 34.4k net positions. Now, this shows a strong increase of the net positioning, with institutions going from a situation where they had more shorts than longs with 80.5k shorts compared to only 52k longs, all the way up to now having a positive net positioning, so a situation in which they have more longs than shorts, so the complete opposite, with 83k longs compared to 49k shorts. So clearly, institutions are moving back to the bullish side for the pound. So if the market will go and retrace to this area, there is good probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this area. So if the market here will correct to this zone, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional standpoint. However, when it comes to identifying early shifts in a trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.